Everyone. My name is Anamika, and we have with us Namrata Yadav, who is a seasoned chartered accountant with over 12 years of experience in direct and indirect taxation, accounting, and auditing. Namrata has established her own CA proprietorship firm, and Namrata Yadav and Associates in Mumbai only. Her impressive career includes not only professional practice, but also a passion for education. That's why she's here with us to, tell you all about the field of accounting and taxation and make your life a little easier as we have to file taxes in July, correct? Okay, I'll give it over to Namrata now so that she can shed the light on everything she knows and help you as much as possible. You can start, Namrata.
Yes. Hello, everyone. As Anamika introduced, she give description about my profession. So I will be happy to share my experience with you for your tax planning and for your future goal achievement. Okay. So first we can as the tax season is started. So first I am giving the little bit idea about your how we can file the return. What?
Sorry,
Anyone
Namrata,
is
there
saying
was a
something?
noise. No, there was a noise behind me. Sorry.
Okay. So can next slide. So here government is providing us two tax regimes. Earlier there were only old tax regime for which SSA have to file the returns. And from last 2-3 years, the government introduced a new tax regime. Okay. So the tax slabs are here. I have just described here for the current year for which we are going to return filing. For that, tax slabs are mentioned over here. That is in old regime up to 2,50,000 there is no tax. So I just want to highlight here that people were in the prescription that I'm having income less than 5 lakh and no tax is deducted. So I no need to file the return. But it is not the case. If your income exceeds basic exemption limit, that is 2,50,000, then in that case you have to file the return. Okay. So I just describe about the old tax regime. In old tax regime, we can take various investments like housing loan, all this expenses we are incurring. So in old tax regime, we can get benefit for that for saving of our taxes. In a new tax regime, the government introduced like those who are not interested in tax saving option, but so to promote the filing of return of income, to promote the government community. So they introduced new tax regime like a lower rate of taxes. So even though we are not making the investments, government is ready to provide some tax rate, decrease in tax rate to save your taxes, so that many people can file their returns. Okay. So this chart is there. It is for financial year 23-24. Okay. And in old tax regime, there is a bifurcation based on individual and resident senior citizen, which are more than 60 but less than 80 years, and super senior citizen that are more than 80 years of age. But in new tax regime, there is no such bifurcation. Like same rates are applied for all three types of individuals. And this is not applicable for NRI tax rebate. In next slide, I have to so for income tax return for financial 23-24. So in that case, for non-audit cases, mainly means that are which are salary employees and those who are having income, they are not which they are falling under non-audit categories, that have to get filed their return by 31st of July 24. So in that case, if we are going to file within the timeline, in that case no late fee is there. But if you miss that deadline, you have to file. You can file up to March, but there are late fee you have to pay for the same. Okay. The minimum requirement for salary employees. So for salary employees, company is issuing Form 16 for them. So Form 16, it represents their income sources and all details are mentioned over there. So that is the basic requirement to get your return file. That is Form 16 you have to take from your company. Okay. And it not only includes salary income. When you file your return, it is not only includes your only one source of income. It consists of all sources of income. Like if you have a salary income, you have a house property, you are receiving any rent, any capital gain, you have made any shares sale transaction, mutual fund share transaction, or property sale transaction. So that also need to be considered while return file. Okay. Here I am just focusing on salary based employees. Okay. So even in that case, now the annual information statement. It is the special unique report generated for each PAN-based employees. So before you have to file the return, you have to check your AI statement, that is annual information statement. That many a time we received the cases like people saying that no, I'm having just salary income. But when we check the AIS, no, that is annual information statement, it is on PAN base. So if you had done only one purchase of share also or sale of shares, and you have received any dividend or you have done any property purchase or sale transaction, you received any saving or a bank account of interest. So all details are reported in your AIS statement. So before you have to file the return, you have to consider your AI statement that nothing is keep over there. So to avoid any consequences from government side, like we are reporting from our side, what are the details available with us, but government are back end, they're checking the details are available with them. The software processing is done, like all the details, all the sources of income must be declared while the return filing of income. So to avoid any future consequences from government, like we have earned that income and we are reporting that, in that case we don't have to worry that we have reported correctly income, we have take the correct deductions. So we are as a proper citizen, we are fulfill the government requirement. So there is no need to worry in the future, like no tension is there, because we are employees, we are contributing to nation's development. So it is our responsibility to file the return in case of uh, to file the return on timely basis to avoid any future consequences. Yeah. Next slide. Yeah. I want to discuss like there is the old tax regime and new tax regime. But in new tax regime, there is no compulsion that like you have to for tax saving you have to invest in specific things. Okay. So I am discussing about few tax saving options, which are options available in old tax regime. Okay. So what it will benefit for you? It will benefit for you in two ways. It is for a saving for your future. Okay. And correct. Second, also you can save your little bit of taxes from that. So before saving, you have to think that is this option is feasible for me? Like here there is a okay. So you have to consider it is tax friendly, tax saving option is there, and also there is the lowest risks. Like the amount we are investing our hardcore money on. So we have to check the risk we are able to take from that. Okay, and also need to consider the liquidity, like we are making the investment for tax saving, but if I have an emergency, I'm not able to remove that amount. So all these things need to be considered when you are making the investment, tax saving investment, or any further investment for a future. Okay. Anamika, next slide. So I am discussing the few options which are available for tax saving, and it will also benefit, you will also get some good returns from that. Okay. The ELSS. The ELSS now get fame in those days. Like earlier, it is not so much of people didn't know about that. Like people thinking that investment in mutual fund or the statement is there are subject to market risk. But mutual fund is there, it is handled by experienced person. So government also promoting that like equity investment must be going in there. So it helps to our economy to grow. So in ELSS, there is a 3 years lock-in period. Like we are making tax saving, we are making investment in the form of I want to save tax, and there is a lock-in period of 3 years. Like I have made investment from my salary, but for 3 years I cannot withdraw from that funds. After 3 years, if I withdraw, there is a tax saving option we have taken, it is okay. But if you withdraw before 3 years, in that case, you have to pay taxes on the debt. That is, you have not properly comply with the regulations. Okay. So 80C, section 80C of Income Tax Act, which help us to get benefit of ELSS. And the one advantage is also there is high returns on equity. Okay, and returns are also tax free, but up to 1 lakh rupees of capital gain is there. Long-term capital gain is there, then in that case it is tax free. If it in case it is more, then it have to be taxed. Okay, the minimum investment we can start is minimum it is from 500. So and from SIP means it is monthly amount deducted from your salary. You can opt for the section, or you can make a lump sum investment. So lump sum also starting from 5,000 rupees. Okay, so one option is there for your tax saving, that is you can invest in ELSS, equity linked savings scheme. Another second. The second option is it is famous for a long years, like public provident fund. Like people are also in mind that I had deposited, I had invested in government securities, in government bank, so I don't have to worry about my future, whether money will go. No, people think that 100% I'm going to receive. But when we think about like we are investing in PPF, then we have to keep in mind that it have a lock-in period. Okay, so it have a lock-in period, and the returns are also as much as government is given from normally it is between 8 to 9%. So here there is a returns are less, but there is a security, like I will receive the funds at the time of retirement, so it will help me in the future. Okay, so investment. So 80C section we can invest up to 1,50,000. For that we can invest 1,50,000 in PPF if we want. And nowadays government also make the rules regarding the PPF like convenient, because earlier that is for a long term we cannot withdraw, but here there are after 5 years of service we can withdraw some amount, and there that is also tax, because when you withdraw amount from PPF it is tax free. So if you are getting interest on that, it is also tax free. So you don't have to worry about tax in future also, but you have to keep in mind like how much amount I am able to invest in that, because it have a lock-in period, that is I cannot use for my emergency. So even in PPF you can start minimum investment from 500 rupees for the financial year, and maximum you can invest up to 1,50,000. So 1,50,000 maximum, it will help for your tax saving. So, if you want more, you can deposit more, but tax saving available up to 1,50,000. Interest rate from 8.7% it was earlier, but it is various. As per government new rules and all the comings, it will deviates. So if you want the secure investment, like I don't have to worry about the future, whether my funds will be locked in or I will not get in on back because the riskiness is there. So in government you can, it is as a backed by government, we can deposit in there. Okay, Anamika, next slide. Term insurance. Old tax regime we can get term insurance. So before taking term insurance, we have to keep in mind, like term insurance, why we are taking, it is to cover the means we have not we don't know our future, how many years we are going to live, but there is a family behind which is dependent on us. So for that we have to take a proper cover of term insurance. So why? Because if we are not there in future, there is a term insurance which when we get the amount, in case of death is there, in that case the amount will be received by our beneficiaries. So it will help to maintain their livelihood for the future. So for that, government also promoting that term insurance is required. So I am also giving the tax benefit if you are investing in your term insurance. Okay. So benefits are like it protects your family. Premium is also very low compared to other policies. It depends upon how much cover you are taking. So For term insurance, I want to suggest that don't take a lot of term insurance policy. Be clear in mind what is your requirement, and on that basis take 1-2 policy which will cover your growth, and which will cover your family in case if you're not there. And there are some like LIC policy also there. They are all based on your objectives. Some are there for in case of emergency, some are there which help you for retirement. So if you have to keep in mind the two things, like I want protection or I want income from that. So if you want protection, you can take plan like that. But if you want to earn from that, no, in that case there is a return which is lower as compared to that. So what I want to suggest, take a term insurance with the purpose in mind that I want to protect my family. For that I am taking the term insurance, and it is not investment product. Term insurance is not basically investment product, but the people are which are selling term insurance, they are, because people are in that perception that if I invest, I want to get something from that, because nothing is certain there, but people in that I want more benefit from that, because the term insurance policies are designed in such a way that that it will give you some return, but the main purpose you have to take the term insurance to protect your family. In case this depend, like if you are a married person, people are depend on you. If you are a mainly in case of a male individual, their family depends on. Even in case of a female, if family depends on them, they have to take a term insurance. If that is not case, they can invest in another options, because the investment is different and insurance is different. Insurance is to protect. Okay, so maximum amount tax benefit are allowed up to 1,50,000. Okay, next slide. Term insurance we will get in case of a death and all the things, we will get the term insurance. But what about the health? Okay, health is first priority, because health is wealth. As all you know, health is important. So when we are making investment, we are saving for a future, but we have to consider that medical expenses may be there in the future, because future is uncertain. So when you protect your family from, we are taking insurance. The insurance is for monetary benefit to your family, but the medical is for health benefit for your family and for you also. So if you are earning income, so make sure you can invest in mediclaim insurance, so protect you and your family, because we don't know, the life is unexpected. So in that case, if these things are help you to not if there is any consequences there. So medical insurance, if we don't know that the hospitalization expenses there, like you must have earned lot of amount of money, but you have not taken proper medical insurance, and something and some disease will happen, so it will affect your future, correct? So proper medical cover should be taken by the person who are earning the, and depending upon age, you have to consider your medical, like the person chances is there, like he is of 25, 22, so there is a less chances that he will get affected or he will get medical expenses, the chances less. But if you consider the parent, their age is more, so there is a chances that medical expenses may be incurred more in their case. So if we take a proper medical insurance, so it will help us to cover our family, to protect our family. So government also promoting that if you investing in medical insurance for your parents, so you will get benefit from that. Okay, so deduction is also available up to 25,000 and 50,000 in case of a senior citizen. So there is a both options, like some investments are there, like we made for ourselves and family, we are getting deduction, and some like parents, like here there is a medical claim they are given to, because they want to promote that, because we are living in Indian country, so our parents are dependent on us. So if we invest, means if we incur the expenses, government is giving the deduction from tax saving. So it is giving us dual benefit, tax saving also and protection also in case of emergency, because by medical insurance we don't know hospitalization expenses, but it is covering a lot much amount, because For example, a person earning 3 lakh rupees of salary year basis means he's incurring 25,000, he's earning 25,000 per. But in case of an emergency arises and her hospital bills come to 1 lakh, it affects his savings and all the things get affected. But if we take on a proper cover, so in that case, the medical expenses get reimbursed. So that cost is reduces up to some extent. Correct? Next slide. This option is like tax saving fixed deposit. This is the very in earlier days this option is many famous that people you are doing the fixed deposit for tax saving. What it save the two purposes, like it will save our money currently and it also save taxes. Okay, so it helps because but in tax saving when we take fixed deposit for tax saving purpose, it have a lock-in period of 5 years. So for 5 years, you cannot withdraw your money if you deposited in tax saving fixed deposit. And the rate of interest are also varying. Earlier there are 8-9%, but now as much as the country is growing, the rate of return like depend upon the bank repo rate and all the things. The investment options are various. So investment options are there available. So it also reducing nowadays. So people are not that much of interested in investing in fixed deposit because earlier there are no such more options are there. Like now there are many startups are there, many big companies are there, bonds and all the things we can invest and we can earn money. But earlier year we have a tax like fixed deposit because we know that bank there are many chances that our money will be saved there. But in that case, there is a safety that money will return back, but it is locked in of 5 years for in that case. So in tax saving fixed deposit, you can invest up to 1,50,000 rupees and you will get means maximum 1,50,000 in ATC you will get deduction. If you want to invest more in fixed deposits, it's your call. But people nowadays are but because the depending upon your age, you can plan like if you are at the time of retirement, in that case you want the funds right back. This is for tax saving, but I am saying as a general because if you have a 25, there is a you have options, you have the age, so you can take a risk, you can invest in shares because you don't if you didn't get money from that you will earn, you have a age for that, you are not depending upon the return from that income. But when you it comes to your retirement, in that case you don't have your regular income, then you have to depend upon the bank. So it is good option to invest in fixed deposits that bank is regularly giving the income. There is no risk, that is I know I will get the amount every month, so for my livelihood, for my expenses. So you have to consider, you can consider fixed deposit because short term is there is a tax saving is there, your money is also saved, 5 years lock-in is there. So all these investment options are what? Tax saving investment options. Why? You can save tax and you can the amount you can save for your future. Next one. Earlier we discussed about ATC deduction options, but if you are earning income from any sources, you also have a benefit of housing loan and rent payment. As you all know, people we have a everyone have an ambition to have your own home. So everyone want to live their own home. So in that case, it is not a small amount we can give and we will buy our home. So we have to depend upon large amount. We are taking a housing loan from banks, institutions. So in that case, government also know that people, how people react, where they investing. So to want to invest in there, so government is also giving the tax benefit option. Like government is giving, yeah, you have a housing loan. For the interest you have paid on housing loan every year, up to 2 lakh you can claim as a tax saving. Only if you are opting for a old regime. Okay. So every year, if you are paying interest more than 2 lakh, so you can pay, but interest for tax saving it is eligible up to 2 lakh rupees. Okay. And here, when we pay housing loan, it consists of two components, the principal and interest. Correct. So the interest is available up to 2 lakh deduction we can take, and the principal amount also we can in ATC we will get deduction for that. And there is also a slab of 1,50,000. So maximum, if you are paying the maximum home loan, you can take old tax regime and you can take benefit from that. Okay. Some people are also there. They are not buying their own house because their place of residence is different and they are from different area. Like regions are different. They are, so in that case, what they do, they didn't buy home where they are working. They are living on rent basis. So in that case, also government is providing like you can claim HRA exemption. So HRA is what? House rent allowance to compensate that. So tax saving option also available in HRA tax. I want to give some tip like uh, for those who didn't yet buy their home, correct, and they are also not paying any rent. So what, most of the what they are living in their parents' property. Okay, so when they living in their parents' property, they are not incurring any rent expenses. Okay, but what if they don't have parents' property, they have to pay rent and have to stay. So in that case also, what they can do for tax saving, they can, because when you earning the income, when you are earning the income and you are staying in parents' property, so by default is there that you are paying certain amount to your parents, like for expenses. There is a culture like we are paying some amount for them for expenses. It is indirect payment. So in that case, what you can do, you don't have your own house, you are not paying the rent, but you are staying in your parents' house. So in that case, you can claim HRA by you can make agreement with your parents like it is your home, you are giving me it on rent, like some portion I'm utilizing for my benefit. So you can pay some amount depending upon the area, depending upon the rate rent existing in that area. You can make an agreement with your parents like that much amount of rent we can fix. So you can make an agreement, you can make monthly payment to your parents, the agreement for which it is prepared, and you can claim same HR exemption in that case. So even though you are not paying indirect you are not paying direct rent, but indirectly you are paying, so you can take a benefit like advantages there for a tax planning purpose in that case. Okay, next slide, Anna. So earlier what I discussed about I majorly discussed about the no and all tax regime. What are the tax saving options are there? Correct. So why we are earning, but we, if you didn't plan properly, we cannot. So if we didn't plan properly our expenses, so we can end up with all the earning will be going expensive. But when you plan, you will able to manage your money, your finances properly. So in that case, what why we are doing, I want to discuss that 50 to 20, 50 30 20 rule. Like how much you are earning, 50% will go in your necessities, like the rent payment, like the groceries, all the things that is which are necessary to life. Because when you are earning, you have to spend on all these things. Okay, so 50% of your annual income you have to plan like that. Like my suggestion is there, like 50% you have to go on your expenses, like necessities are there. Okay, 30% like you are like desire is there, I am earning so I have to spend on myself, so my needs and my desire. So you can spend 30% on your need, what your desires, and 20% like minimum I'm talking about minimum 20% of your annual must be go for your retirement planning, for your future plan. So what it will help, like you are earning now, you are incapable to do work long hours for your future goals. But what after the 60? Because in that case, our like we are not physically that much of capable, and also government decided the age it is retirement for 60. So after 60, it is like you have to give reward yourself. That is, I didn't want to work till 60. Even you can plan for a retirement of early like 50s or 40s. So for that you have to make saving, you have to make the investments. So minimum 20% at least you have to investment your long-term goals. Like after retirement, what is my plan? Like after retirement, if I'm not going to work, but I want to earn the same amount that I'm earning now. So for that, you have to get your retirement planning done. So you start investing. So, but before before making an investment, plus think about that. How much the period for which I am investing. Like now you are 30, you are investing for more 30 years. So okay, after 60, you will get the amount. So if you are from starting yours saving in mutual funds at the 30, you are starting. So after 60, you will get good return. But if you are 60 and then you are planning to do investment in shares, mutual fund, in that case, it is not feasible because the market is kept on fluctuating. Okay. So depend upon, so in that case, at the time of retirement, you can take a very like bonds which are giving fixed rate of returns, government securities which are giving the like post office. I didn't discover post office. Like post office, it is backed by government, and nowadays it is get famous like same as a bank, like corporate banks, they are also managing. So they are having various options like you can invest at the time of retirement, so you will get the monthly income from that. So what you have to plan your future thinking in that I want to work for a it is depend upon everyone's, like I want to work for a 40 60 or maximum we can consider 60, and on that basis you can get your retirement planning done. So it is not like you are earning and you are end up with incurring all the expenses. That is, you are earning, keep the focus is you are there like you I am earning and I'm also saving. So in I don't have to worry what I will do in the future, that I don't have a money. If I plan now only, then I will be relaxed at the time of retirement. I didn't have to work for that. Then even it is people are not taking the retirement like I currently I am working, but I didn't like that work. So I want to get retired from this, and after that I can start with my new venture and all. Also you can start, but for that what you have to do is you have to start saving, investing from current all the things. That is, this is the normal rule, like 50 30 20 rule. You can increase if you don't like. There are people in a family, mainly if person depend on uh, main person and all people are depend on them. So in that case, his ratio of expenses will be more than 50 or 60. So in that case, even you should start from 5 to 10%. That is, you have to kickstart, like start saving. In the base upon the future, you have to start saving. Like it is there, like you have your children. So after 30 years, they will get work, they will get their job. But you have to save for yourself, for futures that you need not to depend on anybody. Okay. Uh, and even in case of, for example, in case of a children, if their parents are still working, their parents are not at which retirement is. In that case, they didn't have 50% of expenses, like expenses shared by all of them. In that case, there is no need there. You have to invest minimum 20%. In that case, you can increase your share, like 20 to 30% or 40% you can invest. So it will help you to grow. So there is a back like corpus with you. From that you can take a decision. So it will help to live stressful life. Like you will be happy that I am managing my finances. I am happy working. So in that case, you can grow. So you can have plan like that. Okay. So that just I discuss about the 50, 30, 20. Next slide. Uh, depend upon the time constraint, I have minimized my slides. So if you want any doubts or questions, we can discuss about that.
No, but the people have asked a lot of questions. They are in the chat. You can read those and answer. You can start from Shriram Joshi, who asked a question. Should I read?
Just a minute. I got. I'm able to see one screen. Where do we get the AIS, means annual information statement you're asking, correct? So that annual information statement now from income tax website, you will get your AIS. It is PAN based, so you have to get registered over there, income tax site, and from that you can download your AIS statement. It is available for every year. From last 3 years, it is get started. So from which for which year you require, you can get that AIS statement. So just make sure that before filing of your return of income, cross check with AIS. Some cases are there, like there is a wrong information shown in AIS, like double information or wrong information. There in few chances are there. Some cases I observe like AIS, there are double reporting also. So in that case, now when you go to the portal, you have an option whether it is correct, it is not correct. So you have to click on that. If the information is correct, you have to place the correct. If it is not, you have to mark as a it is not correct, it not belongs to me. Okay. So I answer this question. Which line in the form 16 instruct how much amount is due to pay? TDS was deducted. Okay. So in the last, after your total income, after all deductions are there, the amount which is there on that income, the tax is calculated. Okay. And there are in form 16, there are two parts. What? Part B and part A. So it is your company's responsibility. Mainly, first of all, it is company's responsibility that the person is earning that much of amount. So on that base, when the company, every company what do, they ask in the middle of months like employees, like you want to opt for a new scheme or old scheme. So if you want to opt for an old scheme, for by this due date, you have to provide the proof for that. So when you provide the proof, company considering the old tax regime upon the consent received from that employee. And on that basis only, what company is doing deducting the tax on the calculation basis. Okay. And what is the mainly in 99% cases, what company is doing, how much the tax need to be deductible, now deducting all the things. And the TDS which is deducted, it is showing in form 16B. Part it is reflecting in part A. Okay, and part B it is giving the like detail of income, how much HRA is received, how much deductions is there. Okay. Pavitra, please recommend a good medical insurance policy for individual 26-year-old. How to identify a good plan for me? Any checklist or guide? For that, like it is specific. It is like insurance advisor is best is there because I want have to give a disclaimer. Like we are a CA, we have a chartered accountant. So what we have mainly into we are into tax planning means as per rules, what are the tax details are there, how much income on how much it is taxable, what benefit from the government scheme we can there. So what I told you, like you get good medical insurance policy based on your age, but the good plan for you, it will be recommended by your advisor. If you want, you can contact me. I will share my advisor number with you because they are person there give you the best option which is needed. So what is we are from our point of view, yeah, for tax saving it is available. So we are also getting done from our advisor, like based on our income, based on the risk and age factor, they are considering and giving the good plans. So if you want, you can text me. I will share the number with you based on your income. Can I start a medical insurance for my 18-year-old sister? Yeah, you can start because, but there is no, in government, like tax saving, you will not claim as a deduction because it is specifically mentions about the parents. If you require, because 18 year is because if she is not working and it is a very less age, and even premium also will get very less amount. So you can start Putra, but you will not get tax benefit. Okay. I have received my form 16 with new regime. How I can change from new regime to old regime at the time of filing the return? Yeah, you have an option like at the time of filing, you can, there is an income tax form, there is one question first asking them whether you are opting out of 115 BAC, means it is asking whether you are not wanted to interest to, we are not interested to going with new regime. So if you are opting out, no, this is see from last year, no, before last year, like financial year 20 to 23 mainly, what they have kept old regime as a default regime, and new regime if you want, you have to opt, you have to select that regime. But for this year, no, for government change, like new regime is by default, and if you want to old, you have to go for an old regime, you have to select that option. Like you have to opting out option is there, like I am opting out of old regime, I'm opting out of 115 BAC new regime. So when you click on there, no, then you will get the options, how much tax saving and how much interest you have declared. So all this deduction is you can claim there when you go for the old tax regime. There is an option. First only it shows that option like you want to opt for a 115 BAC. You can click yes, I want to opt. Then it will give old tax, how much deductions you're in. It will be give you benefit. And what I want to suggest, like compare. You want to go for a new or old, whichever is beneficial to you. Can you brief about ITR? Yes. See, ITR 1 is basically for salary employees. Salary employees income from house property, one house property, then on other sources like interest dividend. And ITR 2, we have to consider the interest income and shares income is there. We have to file ITR 2. Okay. Do I have to pay tax for both sale and purchase of securities and mutual funds? No. For purchase of a securities and mutual fund, you didn't have to pay tax, correct? For sale, what? For sale of a securities and mutual fund, it also see these all things. No, securities, mutual fund sale, it comes under income from capital gains. Okay, not under income from salaries. But when you're filing your ITR, you have to show that I have sold this much of securities. So you have to mention the sale price is that, I bought, cost of acquisition is that much of amount, and the extra what you are getting, depending upon the year of holding, like it is long term or short term. On that basis, it is taxable. Okay. So kept in mind that only sale of securities mutual fund, it is taxable. In that case also, see, in case of a up to 1 lakh of equity, capital gain is exempt. Long term period means holding period of 2 years and more. In that case, short term, it is based on your slab rate. Okay. Are there any good government scheme for tax saving? Yes, I had discussed like that PPF, National Pension Scheme. This is also there. Like National Pension Scheme, I didn't cover in PPT. Like National Pension Scheme. In that case, what you can invest, you will get tax benefit. It is over and above ATC. Like over and above ATC, you can invest in National Pension Scheme, Atal Pension Scheme. So more 50,000 you can in your income, it is eligible for tax saving. And what pension scheme? Pension scheme, as the name suggests, pension means you will get the income after this you attended a specific age. Means monthly you will get the amount. Like salary, you will get the amount, but the returns are depend upon how much you are investing. So in that case, national pension scheme, what you will get tax saving also, and you will get returns also. How do I choose a best tax regime which benefits me? See, it's all depend upon the expenses you are incurring, and means for example, you are paying housing loan or interest, you are taking HRA benefit, you are paying rent. On that basis only, you can decide you have to go for a old or new. Income tax side, there is a available calculator is there. In that case, you can put all these details, how much saving you have done in LIC, PPF, mutual fund, ELSS, all the things. And in that case, you come to know which is beneficial for me. Old is beneficial or for me, or new is beneficial for me. Okay. Assuming I have a 40K take home, please help idea to start saving. Okay. Kausala, it depends upon the nature of your how much you are earning and how much you are spending. It depends upon who depend on you, how much people are depending upon what type of expenses your income, like you have a housing loan or you have a rent payment, and all these things are depends upon that. So if you have a 40K, it's a good amount. If you don't start, at least start with 500. But as I discuss about the 50, 30, 20 rule. So 40K, 20% of that minimum start saving. So if you are earning monthly income, so monthly your amount getting, so start SIP. Or if you don't want to take risk, you can start RD, like recurring deposit with bank. Like you know that at the end of this year, I will get that much amount fixed. So that amount will be saved. So what I say is minimum 20%. But if you are not able to do minimum 20%, so you can start with 5% also, but start like what I want to tell you, like when you start, like when you receive the amount from the next day, you can start your from, so the next day your SIP amount must be got debited from your account. So then you consider, my 5K SIP is there, so now I have for 35K, so I have to manage my in 35K. Okay, so keep that in mind. Okay. Hi, can you please explain which is better in between mutual fund and SSY, means Sukanya Samruddhi Yojana, you are asking, correct? So this mutual fund, in mutual fund, what their expertise are there, they are investing in companies, like mutual fund amounts are invested in share market in various companies. But in Sukanya Samruddhi, it is backed by the government. So mutual fund, you have a ELSS option, so you can invest in that, tax saving is there, and the returns are varies. Like, because when we check about the past track record, now from it is giving good returns, like it is more than 10% only return, you are getting 10-15% return you will get from mutual fund, because the past record shows that you have to select a proper fund, you have to take fund advisor advice for that specifically. Okay, and for Sukanya Samruddhi Yojana, it is also promoted by government. So when it is promoted by government, now you cannot think about the more return, but you think about the security. Yeah, my money is safely over there, and it is for my girl child, for future, her education, for marriage. I can use that fund. So you can invest there upon your risk appetite you have to take. So on that basis, you can consider mutual fund. So if you want more returns, you can more invest in mutual fund. If you want security, you can invest that I want that money back, I will get money back in Sikana Samruddhi, you can invest there. I can suggest you can also share do the proportionate, like if you want to start 1,000, so you can start with 500 mutual fund, 500 Sukanya Samruddhi. Okay, but it both will be helpful you, depending upon you want to take how much of risk now you can consider. I am paying for my son's education in US. Beyond 7 lakh money transferring financially, I paid TDS. How can I claim this back? Will this show up in AIS? Yeah, the extra. See, this is like 7 lakh you have transferred for education. So in ATC deduction, there is option like if you pay 1,50,000 children, up to 1 lakh, when if 1,50,000 you can claim as a tax benefit. Okay, so ATC, that much limit is up to 1 lakh. Okay, and another case, like if you take a loan for that, for your son's education, if you are taking loan from bank, the interest how much you paid for that loan, in that case the interest is more amount of interest, means it is over and above 1,50,000. If you pay interest for the loan you have taken for education of your child, you can claim that interest also deduction. It is over and above 1,50,000. If you didn't take any loan, then you have that 1,50,000 bracket. That is maximum benefit you are having. Okay, and it is like how will this? It must. It will show in AIS. I cannot confirm that. Like it is expenses, no? There are like if we incur any expenses, it is showing in TCS. So that also reflected in AIS. Okay, so you can check with that. And depending upon your taken loan, if you are taken loan, you will get more benefit. If you are, otherwise, you will get up to 1,50,000. Okay, what is Form 10I? Okay, the Form 10I is in that case, like if you want to go for an old tax regime, you have to fill 10I. Like it is a declaration that I am opting for an old tax regime. That declaration form is 10I. Okay. Should I file ITR even with tax deducted for me for financial 23? Yeah, good question. Everyone is, some people are confused, like my tax was deducted, I have on the salary, tax was deducted, so the work is done. No, the work is done from company side. What is my responsibility? Government put responsibility upon the individual. Like if your income is exceeding slab rates, basic slab rates, your TDS is deducted, even though no amount is going to refund, but you have to file the IT, you have to file declare your income. That's how much, even though it is salary income, you have to report that, like, it is a statement like how much that amount I have earned, that much amount is TDS deducted. You have to consider the AIs, the saving interest or all the things. If you are earning another income, it is there. You have to show there while filing the return. Okay. So in ITR, you are taking that tax was deducted for me. For what? Tax is deducted for salary income. It is not deducted for capital gain income and all the things. So when you are filing, if you don't have the another income, you have to just declare salary details, the TDS which is deducted, it will T and TDS will match. Then in that case, you don't have a future liability. Okay, but it is the responsibility. It is government compulsion. That is, if your income exceeding slab rates, if you are in the specific criteria of person, like if you are if you are incurring electricity expenses of certain extending, in that case you have to file the return. It is the rule by government, that is you have to get file the return. The TDS deducted is different thing. It is the deduction of TDS. It is the responsibility of company. Okay, so they are deducting. My government put responsibility on there. Like you have to deduct the TDS. And what is the responsibility for TDS is deducted? I have to file my return. Because in case there are government rules are there. Your income exceeding basic exemption, you have to end up with paying late fee. Like because now earlier government, there is no online linking, all these things are there. So there are chances like people who skip their return and TDS is deducted, okay, and I'm not filing the return. But now all the things are linked. Like online, they can send you notice like you are earning that much of income, why you are not filing the return. Now you have to file the return and you have to pay penalty late fee for that. Okay. Vishwajit. I have already submitted 15G of my FD interest for this year for tax rebate. But while filing ITR, if I add income from deposit, then I have to pay more tax. See, visually, it depends upon the how much income you have earned. Like when you file your return of income, it will consider your salary income plus your interest income, correct? So when you earn from, when you file your return, it will get clubbed. Like you have up to 5 lakh. If you're earning, if you want to out for a, if you want to go for a old regime, then up to 5 lakh you don't have to pay taxes. Okay, but if you want to go for a new scheme, you have up to 7 lakh you don't have to pay taxes. So in that limit, if your salary income plus your FD interest, all this income is comes under this. Before this, there is no extra tax payment. But if your salary is only exceeding like 10 lakh, for example, and you're earning, even you're earning 5,000 or 1,000 rupees interest income, no extra. In that case, because what is company's responsibility, they are deducting TDS on salary. So, and in FD, you fill 15G for 15G for the bank to like non-deduction of TDS. In that case, you have to pay the tax. If you are increasing you are in increased tax slab rates, then you have to pay. But if you are comes under the lower rate of taxes, like if you are comes under below slab, you are like you are below 5 lakh and below 7 lakh, in that case you are no need to pay the taxes. Okay. Whether to invest in mutual fund, is there any services or website that you can recommend? uh, yeah, there are many options are available, like Zerodha, Grow, all many options are available. But I want to recommend, like, if you don't study, if you don't have proper study, na, take a proper investment advisor advice. Like it is your saving your hardcore amount of money. So you have to study all these things, and for that basis you have to invest. So if you don't have any idea about the mutual fund plan, or you can take it done by advisor, because they are professionals. They are studying about that, and they can recommend you the best. As we told, like we are a chartered accountant, we are like, yeah, in that case, if you save, invest, after whatever was in that also comes when you sell mutual fund when ready, then in that case capital gain taxation arises. Then while filing the return of income, we are considered. But the recommendation, you have to consider the advisor, professional advisor in that case. I am taking about claiming back the TDS I paid for education money transfer. See, it is not I think so TDS, it is TCS. So it is TCS, no? In that case, tax collected at source when you are making the payment, no? In that case, they are collecting the amount of money. You will get back subject to your income is like if you are earning the income and the, depending upon a tax slab, how much your tax is deducted. If you have a lower income, in that case only you will get back because you have to consider all the investment while considering this. Okay. Hi, please let us know maximum amount I can use invest to reduce tax saving EMAP by using all option available. Yes, as I discussed, like ATC, ATD deduction option there, and NPS, housing loan and rent. All these options are there. On that basis, how much you are earning, you can invest, and on that basis, tax calculation done. Like we are doing projections also. Like now, the financial year 23-24 is get over. Okay, so for that you cannot do tax planning as of now because it is get over. But for financial year 24-25, it is to come. You know how much salary you are earning, and on that, depending upon that, you can how much, what type of expenses you are incurring. On that basis, we can decide and maximize your in saving or tax saving based upon the investment options you can do for financial 24-25. If I put money into storage and gold bands and get interest, how should I declare that in my IT declaration? Okay. So now if you get SGB interest, no, in AIS report it will show. Okay. So you have to declare in other income. Other income, in that case, you have to income show interest income. So there are options like other interest. So in that case, you can mention so SGB interest amount. Okay. So the interest only it is taxable. Okay. In other income from other sources. Okay. Are digital gold bonds a good option? Okay. For that, I want to even I asked the same question to my advisor. Like, should I go for a digital gold bonds? Like he answered me that you have a first you have to have normal gold. We have a gold coin or thing. First, you have that gold coins because it is easily exchangeable. If you have a sufficient amount of that gold, and in that case, he also mentioned like 1-2 gram of coins or maximum 10 gram of coin or jewelry you have. So it can be used in case of an emergency, like you will get ready cash in that case. So if you have sufficient amount of real gold, then you can go for a digital gold bonds option. Okay. Is Zerodha is safe, madam? Uh, yeah, all these platforms now are backed by the SEBI. SEBI is there operating there, so they have to follow SEBI rules. So these all are we are doing online, but all are backed by the SEBI. They have to follow rules of SEBI. So if they are not working properly, SEBI will take action and will close that. Okay. So all the options are there. Another, can you recommend any online resources to study and learn more about income tax? Yeah, from income tax side, you will get this study material. From there is a CA site is there. So in that get also you will get material from that. Online there are various options available. You will get the income tax calculations done. So you can refer that. I will share my number. If anyone require want to get advice, I will help you with that. Anamika, I think I
Hi,
have
Namrata.
answered that question.
Okay.
Yeah.
Yeah, you have been answering
Tell
from half an hour.
me.
So I hope, people might have gotten a lot of answers. And if you have not, you can contact Namrata. You can, if you want, you can give your number in the chat box. People can connect with you. And I hope the session have been helpful. Yeah, so it might have, solved a lot of your queries and answered a lot of your questions. But I know this tax question and money questions do not end here. Correct, Namrata? You might be getting a lot of questions. Okay, she has just given the number, guys, in the chat box. You can take it from there. And yes, one request, please don't bombard your calls to her. You can simply maybe WhatsApp her so that, yeah, Namrata, you can give your email ID so that people can, send you mails instead of calling or, sending you WhatsApp all the time. Paul, she's giving you the email ID. Okay, sure. Eight. Namrata, have you given the email ID?
Yes.
Where
It's
have you?
ca.namratawhite@gmail.com.
Wait, can you say again? CA?
Namrata White,
CA. Is it capital or?
small.
Okay, also.
I just made you the
Where have you sent it? I cannot see.
I will type it again. Okay.
हाँ आप type कर दो so that people can get it. Yeah, guys, she's just sending it. Have a little patience, I guess. Great. I have sent it to everyone. You can copy the email ID from here. I'll wait for 2 minutes and then we can end the session. You can mail her. She will be, answering you guys on the mail. It's better than the number, I guess, and Namrata, because you will be bombarded with a lot of questions. I mean,
Before
phone
ending,
calls.
thank,
Correct.
before ending, I want to thank IMT Care for giving me the opportunity to share my knowledge with the people.
Yeah.
I help certainly to some extent because it is not the time period is very short. So to
Correct.
cover all the things are not possible. So I try the maximum level in that I can benefit from that.
Advaya, I have sent you her number, but please make sure that it's kept professional and no, bombarding of question calls and messages to her, so that she's not annoyed and blocking your number from that. Okay, thank you, Advaya. I trust you. Okay, so let's end the session on a good note. Thank you, Namrata, and thank you everyone for your patience and for listening to her and asking her such good questions so that everyone, benefited from it. Yeah, for the recording, we will be uploading this session on YouTube. On YouTube, you can access it from IMT Care's YouTube channel. Okay, and I hope that helps answer your question. Correct? Okay, thank you so much. Thank you, Namrata. We'll be ending this session here. Thank you so much. Have a lovely evening and a great weekend. Bye-bye.
Yeah, thank you.